What's up everyone, welcome back to another episode with the Millennial Finance. With vaccines starting to roll out both globally and in Malaysia, is it time for us to start relooking the reopening stocks and more specifically, Airasia? Cha-ching! Airasia stock seems to have found its bottom after its understandably massive drop last year. It even had a sustained run above 1 ringgit per share for the first time since March 2020, but the stock has since dropped back down to around 90 cents per share as of the time we're recording this video, which is the 24th of April. For one reason or another, many Malaysians' first ever stock in the Bursa marketplace seems to be Airasia. Even 3 years ago when I was making this decision to buy my first ever stock, Airasia was at the very top of my list even though I didn't end up buying it. However, I know a lot of my friends and a lot of other people who have Airasia in the portfolio and even had it as their first ever stock. Guess it's just a truly Malaysian company and we all value the cheap flights that we've been able to get to travel all over ASEAN. But that's not the point of this video. We're not here to promote Airasia. Instead, we're going to look at whether now is the right time to buy into Airasia stock pending the economic recovery that we're all expecting. If you're looking to buy Airasia or any other stock on the Bursa marketplace, then sign up for Rakuten and use our link down in the description below and you'll get 500 Rakuten points once you do. So let's start things off by reviewing the absolutely disastrous year that Airasia had. 2019 was actually not a bad year for the stock revenue-wise. It did its highest revenue ever in its history at over 12 billion ringgit, which was around 20% higher than its previous record that it did in 2018. However, despite the higher revenue, Airasia actually suffered a loss in 2019 compared to very strong profits in 2018 as well. But we all know 2020 was when things started to get rough. Being in one of the most impacted industries due to lockdowns, their revenue literally disappeared overnight. Imagine this, in quarter 2 of 2020, they only did 5% of the revenue that they made in quarter 1, coming in at only around 119 million ringgit. Things got slightly better in quarter 3, but further lockdowns meant that quarter 4 was another poor one for Airasia. Since April of 2020, the company has actually lost so much money that every single month, they're losing more money than they actually even made in revenue. In both quarter 2 and quarter 4, their net loss in absolute amount was actually larger than the entire revenue by over 10 times. Imagine you're selling something for 10 ringgit only to lose 100 ringgit. That's how bad things were for Airasia. To keep the business afloat, they of course had to do things that I assume they wouldn't want to do, like taking up more loans and issuing new shares. There are many reports out there that shows that Airasia is getting loans left, right and center, and they're all pending regulator approval. Perhaps unsurprisingly, their current liabilities have increased by around 1.3 billion ringgit year over year, or around 18%, as of the last report in quarter 4 of 2020. To further increase their cash position, Airasia has also said that they will raise around 1.4 billion ringgit through issuing new shares based on a report that came out in July of last year. I don't know if this has happened already, but let me give you a brief explanation of what happens when companies decide to do this. Essentially, every time a company issues new shares to raise money, they're diluting their existing shareholders. The 1,000 stocks that you used to own of Airasia is now worth less because there are more shares outstanding. Imagine a company with 10,000 stocks and you own 1,000 of it. If the company decides to issue 5,000 more shares, suddenly you go from owning 1 out of 10,000 to 1 out of 15,000. That's a dilution that happens when companies issue new shares. With a market cap as of today of around 3.4 billion ringgit, a 1.4 billion equity raise is a massive dilution of around 38%. I have never seen this in any of the companies I'm researching, but it's also maybe because I haven't really been researching on airlines and the companies who have really been struggling, and I know that this is a necessity. However, many investors don't see this impact because they purely refer to share price. But like I mentioned, when there are more shares being circulated, the value of your shares are now diluted. Even though Airasia's shares, for example, is 1 ringgit and 50 cents last year and it's 90 cents today, the valuation of the company could actually be the exact same even though the share price is different. So a lot of new investors might think that you're getting a bargain. Last year it used to be 150, today it's 90 cents, but in reality, you're actually buying the shares at the exact same valuation. This much of an equity dilution is just not something that we can overlook, but we completely understand that it's something that cannot be avoided, and it's also something that we think airlines all over the world are doing as well. Despite all of this, their cash and cash equivalents have reduced by around 2 billion ringgit throughout 2020 due to the cash burn that they had to go through. When they started the year, they had around 2.6 billion ringgit worth of cash, while when they ended the year, it's only around 540 million ringgit. I'm saying as it is 540 million ringgit, it's not a lot of money. Obviously it is, but for the case of Airasia, it's definitely a concern. This is because from October to December of 2020 alone, the company had a net loss of 2.7 billion ringgit. If I had 540 million ringgit of cash and every single month I'm losing around 700 million ringgit, it's just not sustainable. So just by looking at their financials, it's obvious that without raising more capital, whether it's getting loans or issuing new shares, the company has a major risk of not being able to continue the operations. The good news though is that Tony Fernandes recently said that the group has enough money currently to run until 2023 on the worst case scenario. Now, I'm not sure if I'm just dumb and looking at their annual report completely wrong, or that Airasia has raised a lot of money in 2021, but the numbers just don't add up. However, I trust Tony Fernandes in this. I believe they can't just come out and say this without having the real money to back it, so it's good news for me. But I'm not holding my breath to see whether they did perform better in Q1 of 2021. With lockdowns being reintroduced in Malaysia, people are again not being allowed to travel interstate anymore, which of course has its impacts on Airasia. Even though I know that things are starting to get better and many people, including myself, cannot wait to travel as soon as travel restrictions are lifted, I just don't see airlines going back to normal anytime soon. Trust me, as soon as interstate travels are open, I'm going to go to, Bangkok or Perhentian or something like that. And as soon as I can travel out of Malaysia, I'm going to go to Taiwan. But to cut costs during these challenging times, Airasia has had to make some tough decisions like closing its operations in certain countries, reducing the number of fleets that they hold, and delaying new deliveries of planes that they've ordered. While this is definitely something that you want them to do now to cut costs, it also means that once travel restrictions are lifted, Airasia will find it challenging to rescale their revenue to where they once were. Imagine everyone ready to fly again, but Airasia has stopped operations in certain countries, they now have less planes, so obviously their revenues will not go back to where it once was for a while. Having said all of this, I really think that Airasia is just one of those companies that the government won't allow to fail. I'm no expert and I don't have any insider information on this, so don't quote me on it, but I do feel that Airasia Group is just a bit too important to the tourism industry across ASEAN. Even though it's a Malaysian company, we can see signs that governments in different countries are backing Airasia to continue because it's very important that once everything goes back to normal, people are able to access their countries cheap. Now that we've gone through the obvious bad things that Airasia is struggling with, let's take a look at some of their shining lights in these times. One of the things that I applaud them for is their attempted shift towards digitalisation and leveraging the data and the customer base that they have to push new digital products. As part of this, they've launched a so-called super app that was built on 3 key pillars, with it being e-commerce, fintech, and deliveries. These are all hot industries that everyone wants to be in, with companies like Shopee and Grab seeing massive boosts to their business during these times. Even if it wasn't for all the lockdowns, I do think that these companies were on a trajectory up anyway, it's just that they got a nice little boost because of it. So Airasia now has Airasia Shop, Airasia Food, Airasia Money, and recently just announced, actually just 2 days ago, something called Airasia Beauty. While this is definitely a nice roadmap for any company to have, I do question the execution and focus that management has. I mean, these are not industries that are easy to enter, with the incumbents being very large and spending millions and millions of dollars just to build and maintain their market share. Like I said, I'm an investor in C Limited, which owns Shopee. They have massive growth, massive market share all across Asia, but Shopee on its own is not yet profitable. And it's the same thing for Grab. With Grab just announcing its listing on the market, we can see based on their investor reports that they're not yet profitable as well, and they're also cash burning. If you want to see a video on Grab on whether it's a good investment or not, Let us know down in the comments below. But anyway, what is clear is that to win market share of these industries at this early stage of their development, what is needed is a lot of money as an investment. And what is one thing that Airasia Group might not have to compete with these guys? It's money. I mean, of course they have money, but they now also have a struggling airlines business which they also have to pump more money in. It's a completely different story if everything was normal and their airlines were a cash cow for them, providing them the profit so they can put it into the e-commerce and fintech industries, but it's now the complete opposite where every single one of these industries are likely unprofitable. With a limited amount of funds, let's say if I got 1 billion from this government, 1 billion from this bank, I now have to split this 2 billion ringgit between all these businesses that I've actually built. Like I said, these businesses that Airasia has just set up are not ones that you can just expect to set up and make profits from the get-go. I honestly think that this is a risky move because instead of making sure that my main business is going to survive these tough times and then recover, I'm now splitting my money across all these businesses not knowing whether it will make it out or not. I will be extremely impressed with Tony Fernandez and the entire Airasia Group management team if they're able to pull this off. I mean, as he rightly said, people doubted him when he decided to start Airasia many years ago, and he managed to pull it off and become one of the largest airlines in ASEAN, so let's see if he's able to replicate this success. So after doing all of my research on this, I believe that Airasia Group faces an uphill battle to recover their financial footing and the position that they had as one of the biggest players in the Malaysian market. If it was trading in the 50 or 60 cent per share range that it did a few months ago, then maybe I would consider the risk worth it, but right now at around 90 cents to 1 ringgit, I do believe that the company is fully valued and there are many risks behind the execution of this company. This is just my personal opinion. I'm not a financial advisor and I don't give financial advice. Make sure you do your own research because I only did it based on what I could find on the internet. If you feel otherwise and are keen to buy Airasia stock or any other stock on the Bursa Malaysia market, then sign up for Rakuten and use our link down in the description below so that you get 500 Rakuten points when you sign up. So thanks for watching to the end. Give us a big thumbs up if you enjoyed this video and subscribe to our channel if you haven't already. Let us know down in the comments below, are you buying Airasia stock at these prices right now? See you guys in the next one. Peace out.